Hello, guys. We are waiting for a bit before starting. Can someone just confirm that you can see me, you can see my screen, you can hear my voice, just to check that everything is in place? Vijay, thank you so much for confirming. Okay, great. And Vijay, if you're here, uh, while waiting, you can scan this barcode on the screen. This is a barcode that allows you to download the MT4 account. It's a free account. It's a demo account. So if you're new to trading, you can. Are you new to Are you new to trading? Is it the first time you learn about trading, or it's been uh it's been a while? If you would like to share. Okay, great. Thank you for answering. So this barcode on screen, if you are using laptop, I'm not sure if you're using phone or laptop. So if you scan this barcode, uh, Vijaya, thank you for answering as well. So this barcode will lead you to our website where you can download our MT4 account, demo account. So with this account, it's free and you can like make some practices before starting risking your money. So I would advise you to scan the barcode and download the demo account. Okay, so good evening, everyone. I hope you are all doing good. My name is Mazen Abu Ismail, and I'm the market analyst at Naqdi. I would like to ask the question again for everyone. If there's someone who's new or the first time who learn about Forex, about trading, please type one in the chat. And if you know about it, please type two. It's just to like to tweak my introduction and to go slow on some topics. So if you would like to share, okay, Vijaya, I hope I'm pronouncing your name correct. Andrew. Andrew, how long have you been trading? Is it like more than a year or less than a year? 8 months. Okay, okay, great. Great. So today we will talk about the basics of training. It's designed to the beginners and for someone, of course, if someone already know about it, he will benefit from it. All right. So let's start with a small introduction about Naqdi. We are an online trading platform with more than 17 years of experience in financial markets. We provide access to more than 15,000 of product from Forex, gold, oil, indices, stocks, Bitcoin. We operate under STP model, straight through processing model, where all the orders will go directly to the market without human intervention. And we are licensed and regulated by different authority. One of them is UAE Securities and Commodities Authority, ASCA. And in addition to this, Naqdi provide like free webinar like this. We do it on weekly basis in English and Arabic, and we provide daily technical and fundamental reports to our client. And I will show you. So I will show you how you can use it and how to read it. So Naqdi is always next to you, and thank you for choosing Naqdi and joining us today. So why trading in financial markets or why it's important to trade? So of course, If you go to the supermarket or if you're checking the prices in fuel, the rent, all the prices are increasing. And this is what we called inflation. So what's the disadvantage of inflation? It decreases your purchasing power. Meaning, if you have money, the same amount of money will buy less and less with time. So what can you do in order to fight this inflation? Investment. So you can fight inflation with investment, and there's many type of investment. You can open a new business, buy a real estate. You can and of course financial markets, trading in financial market, and specifically in gold and oil is one of the way to beat the inflation. It has some advantage, like you can start with a small amount of or small capital and you can get result within minutes. So that doesn't mean that having a real estate or opening a new business are not good. All are good, but advantage of financial markets is a short result, or you can get a result in a short period of time, and you can start with a small amount. So we will talk more about it. So what do you want to know to start investing? You need to understand what the meaning of CFD. So let's explain it in an example. So let's say the price of any asset, let's say gold, the price of the gold is 2,600. Okay, this is just for the example. So you buy gold at 2,600, it increases in price to 2,650. You sell it, you will make $50 in profit. So, but what if I tell you, and instead of paying 2,600, you can pay 1% of the price, like $26. So instead of buying the gold, you can buy a contract of gold at 2,600, but you pay $26. Once the price increases to 2,650, you can sell it and still get the $50. So in this case, you paid $26, you got 50 instead of paying 2,600 and getting $50. So in this case, if you have 2,600, you can buy 100 contract of gold, and instead of being profiting $50, you can profit $5,000. And of course, as much as you can gain, you can lose as well. But this is the idea of the CFD. So first of all, you don't own the gold, you only, or any asset, it can be any asset, like gold, Forex, stock. But the idea here, you don't own it, you just trade the difference in prices. You pay less capital, which is almost 1% of it, and you get the full profit, meaning the all $50, you can get it. And you can use it when you're expecting the price to increase or decrease. So let's see how things working. So scenario one is I'm buying gold and I'm expecting the price to increase. So gold is increasing, I need to buy and then sell to benefit from this increase. So I'm a trader, I find a broker like Naqdi, I borrow money, I go to the market, I buy the gold at the current price, I wait until the price increases, I sell it, I return the money, and I keep the profit. Now, let's take another scenario where the price of gold is decreasing. So how can I benefit from this? Which is, we call it short selling. So again, I'm a trader. I find a broker like Naqdi. I borrow gold here from Naqdi. I go to the market and I sell it. So once the price decreases, I buy it again, I return the gold, and I keep the profit. So this is CFD. It's a contract. It's not the physical gold or physical asset. It's a derivative it's a derivative because we don't own the asset, or we only trade difference in prices. We can apply it on currencies, on commodities like gold, oil, on stocks, on indices like S&P 500, NASDAQ, and on cryptocurrencies. We can use it if the price is increasing or decreasing for long position or short position. There is no ownership, as we don't own the asset, only we trade the difference in prices. And it's cost efficiency, meaning we are paying 1% or a small amount comparing to the full ownership. And because we are paying less amount, meaning we are using money that we don't have it, which is leverage. What are the instrument type that we can apply or we can use CFD on? Like Forex, like any currency, any pair, USD, GPY, Euro USD, GBP USD. Like stocks like Apple, Microsoft, Tesla, commodities like gold, silver, oil, cryptocurrency like Bitcoin, and indices, S&P 500, NASDAQ, and Dow Jones. Today, we'll focus more on currencies or on Forex. So what is Forex? Forex is also known as foreign exchange or FX. It's a global marketplace for exchanging national currencies. So there's a trading session in major financial centers like New York, London, Tokyo, and Sydney. What does that mean? If you look at the map, you have in the east, in the far east, you have Tokyo and Sydney, and then you have Europe, and then you have US. So each time one market closes, another one will open. So this will allow us to trade 5 days per 5 days per week, 24 hours, around at any time we can buy and sell. Of course, this will bring a lot of traders there. So it's a largest financial market with daily transaction exceeding 6 trillion. So the last statistics said it's $8 trillion per day of Forex. And this means that it's very liquid, meaning at any time I can buy and I can sell. And it's highly leveraged as people using CFD as well. So money that we don't own it, which will increase the volume as well. So let's say we are in UAE and traveling to US. You need to exchange your money, your dirham, to USD. You go to the exchange and you give them the AED and you get the USD. So in this scenario, you are selling AED and buying USD. So that's why currencies are always in pair. Any currency, when you want to exchange it, you exchange one currency for the another. So the currencies are always in pair. And each time you exchange one currency, you exchange it for another currency. So in this example on screen, if you're converting euro to USD, meaning you are selling euro and buying USD. Sorry, there's, I think, the example is written wrong. So if I'm converting euro to USD, I'm selling euro and I'm buying USD. So buying one currency, selling another one at the same time. How to read currency pair? So in this example, we have GBP USD, the pound, British pound to USD is 1.21228, meaning each one GBP, one British pound, can buy 1.21228 USD. So I need 1.21228 USD to buy GBP. So the first currency in the pair is the base currency. The second one is the code currency. Each base currency will buy me that much of the code currency. Let's apply this. Let's apply this in a second example. We have USD INR. USD is the base currency. Each one base can buy 75.50 of quoting currency. One USD can buy me 75.50 INR, Indian rupees. Also, there is two prices for each currency. Those are bid, ask. So the ask price is the price where I buy the currency. The bid is the price where I sell the currency. So here on screen, if I want to buy, I buy at 1.22028. If I want to sell, I sell at 1.22022. The difference between bid and ask are called spread. So here, the difference between these two is 0.6 pip. So the spread is measured in pips. Okay, so now I'm watching the market and I find an opportunity. I need to enter the market. I need to send an order to the market in order to let's say in order to buy. So I have two types of order, or there's two types of order. The first one is market execution. Market execution, whatever I'm seeing on screen, I get it. So here we have this example. The gold is trading at 26.23, 26.22. 26.23 is the bid, 26.22 is the ask. If I want to buy, I buy at the bid at 26.23.11. So I wanna buy gold now, I buy it at 26.23. This is market execution. Let's say the price moved a little bit to 26.23.01. I'm still want to buy, but I don't want to buy at this price. I want to buy at 26.20, which is below the market price. So in this case, I send a limit order. So limit order is the maximum price I'm ready to buy, or I'm ready to pay. So here the market price is 26.23.01. If I send a limit order at 26.20, meaning I only ready to buy at 26.20. So I need to wait until the market decreases in price till 26.20. If the market doesn't decrease, I will not get I cannot execute the order. So here we have the difference between these two orders, or these two types, is the first one, I will ensure that I will get my order done. The other one, I don't ensure that I will get my order done, but if it get done, I will get it at a better price. So here the trade-off between the price and getting execution. Okay, so now we learned what is CFD, what's the order type, what is Forex, and let's see now what's the contract size, because I need to specify if I need to buy market price or limit price, and I need to specify how many I need to buy. So as we said, CFD is a contract, and each contract is contain a specific number of assets. If I'm buying Euro USD, if I'm buying one lot, meaning I'm buying 100,000 of euros. If I'm buying one lot of gold, I'm buying 100 ounce. Okay, so I bought one lot of gold, meaning 100 ounce, and the price moves or change $1. So if the price go up $1 and I have 100 ounce, so I will gain $100, which is great. But what if I bought one lot of gold and the price go down $1? So meaning I'm losing $100. So it's nice when the price go up, but it's not nice when the price go down. So what can I do to manage the risk of of this loss? I can decrease the lot size. So instead of buying one lot, I can go to mini lot, which is 0.1 lot, meaning instead of buying 100 ounce, I'm buying 10. So if the price change for $1, my lot change will be $10. If I need to decrease more the risk, I will buy micro lot, which is 0.01 lot, as if I'm buying 1 ounce. So each one micro lot, as if I'm buying 1 ounce of gold. So each $1 change is $1 change in my micro lot. So contract size can help me to manage the risk in my account. So because of course it's nice when I gain a lot, but the most important thing here is not to lose a lot, because there's always opportunity in the market, and if I lose all my money, I cannot like benefit from those opportunities. So one way of managing risk is the contract size. Okay, so as I said, investment or in financial market, or trading in financial market, can allows us to start with a small capital. So the gold price, let's say, for example, is 2,600 and each one lot is 100 unit, meaning the price of one lot is 260,000. And if I have $2,000 in my account, I'm not able. Now I will show you how with this $2,000 in my account, I can buy one lot of gold value of 260,000. So here I need to use the leverage. So leverage by definition, it allows us to control a larger position than your actual capital. So if I'm using, for example, 1 to 200 leverage, meaning each $1 I have can allows me to control $200. So if I have $2,000 times 200, so I can manage 400,000 position. And we said that the price of one lot of gold is 260,000. So now I can buy the one lot of gold using leverage. So here I need the margin. So the margin, it acts like security deposit, an amount that I paid in order to get to buy the lot of gold. And once I close the position, once I finish, this initial deposit will return to me. So continuing with the same example, the 260,000, the contract value divided by the leverage, the 200, equal 1,300, meaning if I pay 1,300, I can buy one lot of gold using leverage. So I buy gold, I pay this margin 1,300. Once I sell, the 1,300 will come back to me plus the profit. In case of loss, the loss will be deducted from 1,300 and I will get back the remaining. So this is how it acts as security deposit for holding a position. So let's now calculate what I can profit and loss from leverage. So continuing with the same example where we're having one lot of gold at 2,600. We have two scenarios. The first one is the price of gold increased $1. So from 2,600 to 2,601. So if I need to calculate my profit and loss, I need selling price minus buying price times contract size, which is the number of unit in it, which is 100 times lot, and we bought one lot. So 2,601 minus 2,600 times 100 times 1 equal 100. The scenario 2, the gold decreases $1 from 2,600 to 2,599. Applying this formula, I will get $100 loss. So here, the key takeaway is $1 change in the market price will equate $100 while trading one lot using leverage. So $1 change, meaning if the price go up $1 or go down $1. So this is why the contract size is so important to manage the risk. The other way to manage the risk is something called stop loss. So let's say we have this graph. It represents the price movement. If I buy at this point, so anything, any level above this point is a profit, anything below it is a loss. So here I can place a stop loss. If I'm buying, meaning if the price go down to the stop loss, there is a sell will be executed automatically. And what will happen in this way? This is the maximum loss that I can lose it. So anything above this level is a profit for me. Anything below it is a loss until the stop loss. So I will be protecting myself from the decrease more in price. So we have a floor. This is the maximum that I can lose. So for risk management, we can use two ways or two things. It's important, very important for risk management to protect our capital. Is first one is managing the contract size, how many lots I'm buying. If I have $10,000, I can buy one lot. If I have less than 2,000, I buy 0.01 or 0.1. So in this way, I will decrease the loss in my account. The second thing is the stop loss. So when the price reaches a specific level, there's a sell order will be executed automatically, and my account will be saved from the decrease more in price. So there's always, as I said, there is always opportunities in the market. So the most important thing is not how much I gain. It's the most important thing is how much I lose, because if I lose less, I can stay in the market. I can stay investing and finding new opportunity. and regardless how much I gain. That doesn't mean that gain is not good. Of course, everyone wants to gain, but we need to take care of how much we are losing. So here is the roadmap. So in order to be a successful trader, we need to know the technical analysis, which is studying the charts and knowing or trying to predict the future price based on the past prices. We need to understand the fundamental analysis, meaning if I'm trading gold, what's affecting gold? The geopolitical risk. So now we saw on Friday how Moody's decreased the credit risk of US. So there's like a fear in the market, so price of gold increased. So this is the fundamental analysis. At the same time, if I'm trading oil, OPEC Plus decided to increase the production, meaning there is more supply in the market, so the price went down. The geopolitical risks, if there's fear in the market, people will go buy gold, same price of oil will increase. So this is a fundamental. Any event that affect the asset we are trading. And risk management, it can be by setting a stop loss and choosing the contract size. So why those are important? Because usually our decisions are based on emotions. So when we have a clear plan why I'm buying or why I'm selling, we are trying to decrease the relying on emotions. Or so in this way we can have a clear plan. I would like to say now that we at Naqdi, we are doing another webinar about those three, how to use technical analysis, fundamental analysis in order to create your strategy, which will be next week. Second thing, we provide our client with 2 reports that's cover the technical, fundamental, and risk management, and I will show you how. So we provide the report. One will be go to the emails of our clients, and the other one you can find it on our Telegram channel. It's a free report. This is the barcode of our Telegram channel, and again, it's free, and you are welcome to scan it and to follow us there. And here there's a screenshot about our recommendation of gold today. So we cover major currencies, gold, oil, and indices like S&P 500, NASDAQ, and Dow Jones. So how we can read this? So today we are bullish on gold, meaning we are expecting the price of gold to increase from 3,207 to 3,248. So you can place a buy order at 3,207 and take profit at 3,248. So I'm just checking the price of gold now. So it reached 3,280. So this is how you can use this account in report, in addition to another report will be sent to our client. Okay, so till here I reached the end of my presentation. If you are new to, first of all, thank you for joining and for staying till the end. If you are new to trading, I would advise you to scan the barcode on the left of the screen and download the demo account, which is a free account where you can learn for free. You can get like $100,000, which is a virtual money. You can apply our strategy, our recommendation, and to familiarize with the platform. And if you're ready, the barcode on the right is for the opening a live account, and we have a bonus. If you fund your account within the next 24 hours using this barcode on the right, you can get a 10% bonus. So I repeat, the barcode on the left is for the demo account. Okay, I wrote live. It was my mistake. I'm sorry. The barcode on the left is for demo account, where you can have a free demo account, and on the right is for opening a new account, and you can get a 10% bonus if you fund your account within the next 24 hours. Till here, I reached the end of my presentation. I hope you learned something new. Let's open the floor for questions and answers. I already saw some question in the chat, so I'll be here reading it and answering it. Okay, so I saw something from Savly. It said right to buy and sell direct quote. Sorry, the question was at 6:10. So can you remind me with the question, please? Okay. Again, safe haven gold. Yeah. I think when I was explaining about fundamental analysis, so say, gold is act as safe haven whenever there's fear in the market. People will go to gold when there's less risk in the market. People will sell the gold and go to the stocks. Please suggest books to learn technical analysis. First of all, thank you for continuing on learning. Uh, I don't know books, but I you can find it on YouTube channel. There's a lot, and we are doing a webinar for technical and fundamental analysis. So you're more than welcome to join us. Okay, the code on the left, the same code which you had showed at the start. Yes, the code on the left is the same one that that it was on the beginning of the presentation. So if you already scanned it, this is the same thing. It will lead you to our website and you can download a demo account from there. And let me go come back uh, to the barcode of our Telegram. If someone would like to follow us on Telegram, again, it's free and you can receive the daily recommendation on it. Do you use TradingView platform for charts? Yes, I do use trading platform for chart. It's very beneficial and it helps a lot, especially if you are doing technical analysis on it. Thanks for answering. Thanks for asking, Vijaya. Okay, I'm still here. There. Okay. How many licenses do you have from UAE Financial Authority? We have one, which is from ASCA. Is it enough, Kamran? Okay, I'm checking if I missed any question. Yeah, but ASCA, I believe not enough. Uh, you can have as much as you can from license, but as online trading, you have to have first of all uh, a license, especially if we are in UAE, from Securities and Commodities Authority, as this is the regulator here. So we have other from South Africa, but I don't think it will help in UAE. So depending on the location, and ASCA uh, is the regulator for forex companies. How much minimum deposit? You can start from $50 to $200 as a minimum deposit. But you know, in order to manage your risk, you have to have like at least $1,000 in order to can so you can open a trade and you can wait on it. So when your deposit is small, meaning you cannot wait on the tape, you open it and you directly need to close it. So let's say if the price go down and you're buying, so you don't have time in order to go up. So that's why having a bigger deposit is better. So although it's $50 to $200 to start an account, but I would advise to start with $1,000. What if I don't want to derivative and only trade in stocks on UAE and USA? Do you give option to trade in stocks? Okay, so if you don't want to use CFD and you want to trade stocks in UAE and USA, uh, we don't have access to UAE stocks. We do have access to USA stocks, but but it's CFD. What you can do in this, you can open either an Islamic account or you can use CFD but fund all the accounts. So let's say you are buying Apple, 10 shares of Apple at 210. So you pay 2,200, you keep it in the account. This is way you're not using CFD. But it's CFD. The product is CFD. What's the processing time to withdraw of profit? It's fast. It's like within 1 or up to 2 days to withdraw the profit. Sir, I'm new to Forex. Could you please show one sample trading on CFD? The example of gold. Okay, I'll go back. Okay, so let's say if you buy a gold, a 1 ounce of gold, if you pay the full price, uh, you'll you pay 2,600 on the platform. I understand basics. You need to any product you buy it is you'll be on the platform. You'll be a CFD. The thing is, the difference is you're paying less. You are paying less margin instead of paying the full amount. You're paying less. This is the difference in CFD. That's it, and you don't own it. So it's same thing. If you understood the basics, everything is the same. So you don't pay full amount. You pay a margin, which is a 1% of it, and you get the full profit. That's it, and you don't own it. It will stay on the platform. That's it. This is the real example of the CFD. I hope this helps. Are you registered here? Sorry, I cannot open the website now. Uh, we are ASCA licensed. Okay. Thank you so much for joining. I really appreciate your time. Is it only settlement based or delivery is allowed? I'm not sure if you're talking about the product, the stocks. It's settlement based. I'm not sure if you're talking about DVP, RVP, because I'm coming from trading and from stocks, from it's only settlement based or derivatives is allowed. Sorry, I didn't get your question. Are you asking about DVP, RVP, delivery first product, and didn't get your question. Answering what I understood, it's all we have is CFD and no access to UAE market. And we do have for USA and addition for Europe. Okay. Thank you so much for asking. How does it take for news to affect the price actions? Instantly. If you see what happened, the latest news coming uh, about Moody's. Moody's decreased the credit risk of USA. So it was on a Friday night. So at night, the market closed, so nothing happened. If you check Sunday morning, oh sorry, Monday morning, where the Asian market start opening, the gold open at a gap, meaning it jumped in price because there is a risk, so it jumped in price. At same time, US indices went down, so it came it directly affect the prices, and this is why the reason Moody's announced the decrease in credit rating on a Friday night. So to give some time for people to affect to digest. So if they or if you can see, usually when there's any company need to announce their profit, they announce it after market. When the market closes, they announce it. So just for the same reason, so because the market participant will directly act on the report, on anything happening, on any news coming. Sometimes, like, let's say there's a news that uh, Ukraine and Russia are doing or are agreeing on a peace agreement. So yesterday night, Trump was on a call with Putin, but nothing happened. So this news didn't affect anything in the market because it's already priced in the market. We all know that we're going to a peace agreement, but it will take time. So this news didn't affect it, but because it affected already. But usually, events, news will affect the market instantly. Uh, could you share the PPT by email? I don't mind, but I would prefer uh, if if you follow us and you join us on the next webinar, so you can ask, so we can have the pleasure to have you and answering any question you have, because I try to put very less of information because I want to rely on speaking and on example more than what you see uh, on slides. Is this the only presentation or there will be another one? No, no, this is not the only one. We do it on every week. We do it on weekly basis. We do it one English and one Arabic. So tomorrow we have the Arabic version, and next week we will have as well, and it will be the advanced. So one week is the basic and the other one is the advanced, and it will be weekly and 2 days per week, one in English, one in Arabic. When's the webinar or technical analysis, fundamental analysis? When is the webinar on technical and fundamental analysis? It's next week, next Tuesday at 6 p.m. Thank you so much for joining. I'll be signing off now. I really appreciate your time and I hope you learned something new today. Good night.